Good morning. I'm Pete Najarian. This is The Take for Market Rebellion. And wow, the markets could just continue to have all of this crazy moves. And a lot of people say, well, when the market's up and the volatility's up, does that concern you? No, not necessarily. It's actually still the measurement. It's not the fear index that you hear a lot of amateurs talk about. The reality is, it is another one of so many different ways that people can look at the markets, but it's the anticipation and the expectation of what we have been seeing in the markets and where they might be going next. And we've watched that volatility start to creep back up a little bit because there is still enough uncertainty in these markets that it makes a lot of sense. We are getting the movement. If you look at yesterday, just a great example yesterday. So the S&P and the Dow were absolutely getting hit pretty hard to the downside, yet the dislocation, the NASDAQ, and those big names really moving to the upside. So that was sort of that story of the day as we were waiting for the Fed. Now, then we finally get the Fed. We've got all these different things, projections of near zero rates through 2021, but financial conditions are improving. Looking at unemployment rate, we're talking about maybe looking this year, by the end of the year, a little under 10. And in 2021, looking for something close to 6.5%. So real GDP of 5%, all of these various numbers. So what was the reaction? At first, we had a nice move to the upside. The markets absolutely started screaming to the upside. And what did they do after that? They followed that up, big pull back down. So you look at the Dow itself, and we had pressure on the markets, rallied all the way back, got up into the green, then dropped 350 points from those levels to finish down 282 points, down 1%. So it really does make sense. We talk about a volatility index all the time. And what is it really telling us? It's telling us what sort of expectations should you have in the S&P in terms of movement each and every day. And that's what we're looking at each and every day. So where were some of the biggest drags? Well, the biggest drags were some of the areas that have been obviously the powering move to the upside. So that's industrials, that's financials, that's in energy. And energy itself was kind of hanging around pretty well near 40. That's a different story today. We'll get into that in a second. But when you look at that, financials under some pressure. You look at the industrials under some pressure. So it really was a tale of getting back to certain names contributing to the upside that were really powering the NASDAQ and obviously part of the S&P, so helping out the S&P to some degree. So you had Tesla, you had Microsoft, you had Apple, you had NVIDIA, Salesforce, those kinds of names, Amazon, Apple. I mean, across the board, we had some very powerful names and a lot of names that are actually hitting all-time highs. So we have that aspect of it. And we were taking a look at gold trading near that 1750 mark once again. So that's something, hearing more and more people talking about gold and the price of silver, and maybe we'll finally start to see the acceleration of silver. We'll see how that actually plays out. Now, today we had the jobs report. About in line, but as we got closer and closer to the opening, we just kept drifting further and further down. We were down about 460 points. That's a pretty significant move to the downside. That was very early. By the time we got to the opening, we were close to down 1,000 points. So a pretty dramatic move in the markets in the pre-market. We're just seeing an extraordinary move and a big push to the downside. So where are we now? We're only about 30, 40 minutes into the day. I wanted to get up here early so that we could get everybody an opportunity to see the take and then start to progress from there. So S&P down close to 3%. Sounds a lot like what we were talking about with this volatility index, huh? NASDAQ down about 2.25%. Dow down about 3%, 800 some odd points, unless that's changed. No, it has not. And I'm also looking at WTI crude. That's down significantly today. So that's going to be pulling on energy, obviously. And you're going to see some of the financials under some big pressure, obviously. But so where are we seeing volatility? Well, we talked about how we've been pushing down pretty rapidly, but it felt like the volatility index was kind of holding on to a little something, a little bit higher even than where we were measuring in terms of movement, which makes some sense. That's going to be part of it. It's the trade of these front month couple of options in the S&P that gives you this whole metric in the first place. So we're looking now at the volatility hanging right around 32. We could get a little higher. Oh, I just took a look. We're actually back down off of that 32 level. We're closer to 31 now. So we are moving. We're at the highest level since mid-May. So volatility, big spike. What else has been spiking? Volume. The volumes in this market, and we've talked about it day in and day out, the volumes in this market have been extraordinary. Now, I'll address one real quick thing and then we'll get back to that. Everybody's talking about all these day traders, all the rest of this stuff. That is not what's moving the markets, folks. Day traders are not moving markets. There's the monster traders are the ones moving the markets. And when I say that, we're talking about funds that have billions of dollars and all kinds of different, not just hedge funds, but all over private equity, you name it. And those huge investors, that's really what's moving these markets around and participating in some of the trash area as well. And they've had their run. But I don't feel like what we're looking at right now is just this sudden onslaught of trading from home, folks. I think there is definitely a pickup there. There's no doubt about that, because a lot of people have been at home for the last couple of months. They're looking around. They're trying to do different things. They're getting their Schwab accounts or whatever it might be. But knowledge is king, and you better be knowledgeable if you're in the options world and have that understanding. And speaking of that, the volume yesterday, we got about 35 million. That's day 6, over 30 million contracts trading over the last week. So take that in and understand how much these volumes really do mean. I mentioned yesterday, the year-to-date volume still around 28, starting to push up a little bit, but call it about 28 million per day. That's a huge number. Our biggest year ever of trading options in the derivatives world has been about 20 million, and that was 2018. 2019, or just a little bit less than that, but very, very close. So call it 20 million over the last couple of years. Right now, we're averaging about 28 million per day. That's a huge number. So crude, I mentioned that a second ago. Crude was up towards 40. It's down 7% today, a big push to the downside. Gold still hanging around the 1750 mark. A lot of people are starting to talk about 2000 once again. We'll see. That's been a conversation for a really long period of time. Had a very difficult time reaching that. This is the kind of environment, however, where you could see something like that. We did see an incredible amount of paper yesterday in GLD to the upside, bullish, and GDX, which is the mining index. That also very bullish paper. So pulling on the markets today as we're down 768 points as I'm looking over the TV right now. So that's a live number. Industrials hitting hard to the downside. The real big leaders right now in terms of affecting the Dow itself, take a look at Boeing, take a look at Chevron, take a look at Exxon. That's really pushing on the Dow. But then you can even add on into the industrial space, Caterpillar, you could put in Dow, you could have those kinds of names. Chevron, Exxon in terms of the big energy names. But on the OIH, which I've talked about time and time again, the secondary energy names, oil names, the services, these names had been going up, 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 up. Take a look at the OIH now. That chart, you don't go up forever, and we all know that, and there's going to be some pullbacks. Well, we're getting some pullbacks now. As a matter of fact, Halliburton down about 10% today. OneOak down about 10% today. So we are seeing that kind of movement, and it makes a lot of sense. We've talked about the move in oil from 17 to 40 in a very, very short time frame. And as a matter of fact, you go back a little bit further and you talk about that negative side as well. This is a huge flip in energy to the positive, but we are getting a pullback today. So it makes sense that you'd see a pretty big hard move, which we are, to those energy names as well. So JP Morgan, Citi, Wells Fargo, Goldman Sachs, those are the names all down about 3% or more on the financials. That getting a nice push to the downside. That's why we're seeing markets down now about 800 points, just a little bit less than that. Add to that the trash game. And when I say that, I just mean that from the standpoint of the names that had been so trashed, so hit, so given up on, that had been running to the upside. And a lot of people talk about the commentary about those getting pushed to the upside. Makes a lot of sense. You had a lot of short interest in a lot of various names, and the effects of the potential of where those names were knocked down to. Do they have a little bit of upside, or have they maybe even overextended from that upside based upon the little bit of information we have right now in terms of trying to project forward into the future? That's going to be very difficult. But airlines, hotels, leisure, all those kind of names definitely getting hit. Huge pressure today. Those are the same names that on these big up days have been big participants to the upside as well. So that makes a lot of sense that the volatility there is even higher than the general S&P, where we're talking about 32s and so forth. There's a lot of different areas in the marketplace right now where the implied volatilities are still extremely high. When I say that, I'm talking about individual names where They normally would be trading, let's say, in the 20s, and they're trading in the 50s, but they were as high as the hundreds at the highs. These implied volatilities across the board, you always want to look, and that's part of the understanding and the process of looking at these derivative markets to understand the history and where are we now and what does that really mean in terms of this implied volatility. So there's a lot to digest there. That's why knowledge is king. Now, speaking of unusual option activity, we already have plenty on the site right now, but one really stuck out, just hit right before I walked in. I literally changed what I was going to talk about, so I'm going to talk about this one. Now, Service Now, NOW. 3,400 of the June 12s. Today is June 11th. The June 12 calls they're expiring tomorrow. They're buying the 400 strike calls. They bought about 3,400 of those. They started paying about $2.30. They paid over $4 for these calls. The stock started at $3.89. By the time they finished buying all these calls, it was trading at $3.94. Gives you a little idea of just how rapid and fast these things can move. I stayed away. I pulled back because it moved so quick. Now on a pullback, I might start looking at this again. But trying to be disciplined. This is part of the whole thing that we talk about all the time. Each and every day we talk about discipline and trying to be disciplined in the markets. This is a tough one for me. I know a lot of our guys were great and were able to jump onto this one right away. You've got to be really, really quick. But if you were not, then this name has already moved significantly to the upside and it makes it very difficult. And I think sometimes you got to be disciplined and say no. So anyway, guys, make sure you get educated. So important. Market Rebellion, that's what we're here for, trying to help you out so you have a good experience, not a bad experience. And that's exactly what we'd like to do, is help people out. We have the best educators in the business. We are the Market Rebellion. The rebellion certainly has begun.